On today's video, I want us to be able to discuss some of the entries that you can be able to take advantage of. What's going on, guys? It is your boy Lisamutupi and welcome to my YouTube channel. So today we are going to be looking at some of the entries that you can actually learn about and at the same time execute them in order for you to be able to make those profits. And one thing that I like about them is that they help you be able to just minimize that stop loss and be able to just maximize the profit potential. So that's one thing that we are going to be seeing on, and luckily we caught one using this exact strategy. So we caught one trade using this exact strategy, so it will help you be able to just see the actual, like, how to actually catch it, type of a thing. So yeah, I think one of the best things that you can do is to like this video and as well subscribe to my YouTube channel, and let us get started on the charts. So now, getting started, I want us to be able to understand there's different types of entries in the markets. So normally I've seen that most people would be entering using what we call market execution. That is when automatically you go in the markets and, like, you just go straight up, and then you literally just place up a trade. So let me just show you guys a real example right here. So let's say market execution would just be you coming up in the charts like this and then pressing just here, and it's written right here, market execution, and you just buy or sell with the current market price. So with this one here, it's okay because a buyer or a seller is able to get a price from what they're seeing. So it's okay if you are knowing that you trade like strategies that are like maybe breakouts or something like that. As soon as the market breaks out, it confirmed it broke above and or below a specific structure, then you can execute a trade on it. But that is the market execution type of an entry. There's what we call as well stops. So stops are more like when you have a buy stop or a sell stop. It means that, let's say for instance, looking at this scene here, let's say price is somewhere right here where it's at now. If I'm saying that if price breaks below this area here, I want to find myself in a sell. So what I do is that I'll have a sell right here, maybe stop loss here, and maybe take profit all the way down here. But one thing about this is that only when price has confirmed it goes all below down, it breaks below, that's when it will enter with me, or it will take me when it goes in my direction. So if it doesn't go in my direction, it will never execute my trade. I'll never be involved in this. The same thing is true vice versa with the buy situation. So that is the stop side of things. There's as well the limit. So the limit is one thing that I love. I will show you guys how I was actually able to catch a trade using a limit. But a limit is actually how I love things. But what the limit, how it works is, if you are able to spot an entry, let's say for instance the market is now somewhere here where it is at. If you are able to spot an entry, what a limit would normally do is that you'd be saying that, no, I want price to push a bit to the upside for it to come here. When it comes here, that is when I will take a sell. I'm gonna sell here if it's here, and I'll put my stop loss just above this area, maybe anywhere somewhere around here. I'll put my stop loss just somewhere around here, and my take profit would still be around here. You see, same trade, it's still moving downwards, but look at the risk compared to reward. With the sell limit, we're able to get a 5.4%. But when I showed you guys that example with the sell stop, it was giving us something close to a 2.4%. So one of the reasons on how or why I actually do love the sell limit is the fact that it allows you to get the price exactly where you want it at a cheaper rate, meaning that if you are buying, you are able to wait for price to go all the way down, then you have a buy limit, and it will allow you to do it to buy the price when it's very cheap. The only disadvantage is that there will be times whereby you might miss that opportunity because of the fact that the market didn't reach that exact area, or sometimes the market can go to that area and miss it with just like 2 points or 2 pips, and then continue going in your direction, and now you might even miss out on a trade just with that. So let me just show you guys how I was able to catch this beautiful trade right here. We're looking at US 100. So looking at it here, you can simply see that we are now at a strong resistant area right here. You can simply see price came, it retested here, and at the same time, just by coming from here at the low, I've got my trend line right here. You can simply see that there's a beautiful pattern that eventually just broke out with this move. It eventually just broke out right here with this move. So this is one of the ways that I was able to see it. So with this, I took a message that, okay, no, some resistance, it couldn't break, gave us beautiful evening stars here at the top. At the same time, price came, it broke below here. So there's a higher chance that the price might come back a bit more to the upside and retest this area. So how I saw this was more on a retest towards this area right here. You can simply see a retest towards this area, and then one thing that I done now is that I just added it by having at least here this area right here because I simply see that as soon as price came from testing here, it came down, it found some area of support here, and then it went a bit more to the upside. So let me just show you this area of support that I'm speaking of, this area of support right here, and then it continued going back to the upside. So this is one thing that I saw, that I knew most definitely that this is where my entry has to be somewhere around this area. So that's what I done. I just went in the markets, price was still here at the time, and when price was still here, I'll just it was still here at the time, and when price was still here, I put a sell limit right here and a stop loss, which is just a bit more above here, and now my take profit is set all the way down here, and then boom, price went, literally it activated us right here. It did activate us with this week, boom, activated, and then boom, now it went in. So currently we're running in profits. You can simply see it's running profits. It's just a management game. One thing that I love about this is that a trade can never really go into drawdown. The only time it goes into drawdown is when you didn't get those nice entries, and then if it does happen to go in drawdown, you know that your risk or your stop loss is very tight because you entered it exactly where you wanted to enter it. At the same time, the profit potential, we are always targeting 5 times more. 1:5 plus, 1:5 plus. That is the type of results that we get when we are implementing or using this type of strategy. I'm just excited that with this you're able to see how it's moving. So one thing that I like is that you saw with the different types of entries, you saw with the buy stop, you saw with the market execution, and at the same time you saw with the limits. On top of that, the best thing that you need to do is you need to be able to look at your personality, because I feel like once you are able to look at your character, your personality, it will enable you to be able to know what is the right method that is better for you or safer for you. Because why? There'll be what we call, most people will be like, no, I'm okay with entering market execution, but find out that if you are able to use that exact same strategy but using some limits or maybe some buy stops, it might work out more successfully for you, because it will avoid you being involved in trades that are not ready. Because why? With market execution, you see something, you buy right now, and then it goes maybe against you and it was not yet ready. You just went through what we call fear of missing out. Unlike when you have a pending order, it means that you know exactly what you're looking for, you know why you are waiting in the markets, and you know literally if the market does go in your direction, it will activate you and it will progress in your direction. And one thing that I like is that you've managed to have stuck your stop losses or your risk to a very small percentage or a very small amount, which means that it opens up more room for profits and it decreases room for losses. So that's just something I wanted to show you guys, so that you can be able to know different types of entry methods, and most importantly, it's very advisable for you to be able to see which one works for you and also back test it, and then on top of that, and implement these methods. I know most of you guys, in order to be able to just get such trades, you obviously need to be trading with a broker. And one thing that I like is that I am trading with IQ Markets. I've been trading with them for over 4 months now successfully. I'm excited, I'm happy, everything about them is so well. I even love the splits that I actually do have, and as well even the execution, because right now looking at this, I wouldn't have caught this trade if I was with a different broker. I wouldn't have caught this. Other brokers have a spread that is so huge, and then when it does this, find out that the buy didn't really activate, or the sell trigger didn't really activate your trade, and then it happens that your trade is valid, it goes in your direction, but because of those small pips, 2 pips spread or something similar to that, you'll miss out a lot. So in order for you to be able to not find yourself on the wrong side of the market, or find yourself on the right side of the market but find out that the broker didn't really execute your trades, the best thing that you can do is to open an account with IQ Markets. And as soon as you're done, verify your account, and then you can start funding and trading immediately. But that's it for today's video, guys. I'm excited that you guys got to learn about the different types of the market orders, different types of market entries, and at the same time, look at yourself, look at what would make you big, what would actually make you happy, and then from there add that into your trading plan. And once you've done that, get yourself an account with IQ Markets. If you already have one, make sure that you're trading successfully with them, because this would actually work much more better, especially if you're going to be using limits. It will work much more better with the broker that is a tight spread. And from what I've seen, IQ Market is the best, since I have been trading for the past 6 years, so I know what it is that I'm looking for in brokers. But I'm excited, guys. Make sure that you like this video if you happen to have found value. And on top of that, I need you guys to just comment below, tell me what it is that stood out for you, and as well tell me what it is that you'd love to see more from my videos moving forward. And on top of that, guys, I'm excited, I'm glad. Make sure that you have hit the subscribe button, turn on the notification bell. Whenever I upload, you are one of the first people that will be updated. I'll see you guys on the next YouTube video. It is your boy Liswa Mutupi, and I thank you so much for watching.